welcome back to the channel. It's Jimmy Trades here. Thank you for joining me on this beautiful Monday morning. Hope all are doing well. Hope you had a great weekend. Let me know in the comments what you got up to. I nearly went camping, but I didn't go camping because we had plans on the Sunday, but we spent the day out, just me and my boy. We went up to a place called Kenilworth and spent the day up there on Saturday. Just enjoyed the river and had some fun and hung out with some friends, which is really nice. So I hope you all had a great weekend with friends and family as well. Let's get on with this week. Interesting week ahead. Obviously we've got US elections. So let's move over to the calendar and we'll have a look to see what's going on. So first thing to note is we've got this shift in daylight savings time for the US. So that has already shifted. So what that means is now for our charts, we want to have UTC -5 as our time zone. I'm in Australia, but I always leave my charts to UTC -5 because it reduces any confusion or eliminates it completely for when I need to be in the kill zones, when 9:30 open is, all that sort of stuff. So that's what I'm always leaving my chart set to, UTC -5 or UTC -4 when daylight savings is in play. It's just a simple process that I like to use. And that way we can always know that we're trading within the kill zones, the correct time for the kill zones, and indice opens or commodity open. So nothing changes with your times. If you just set your chart to UTC -5, you don't need to worry about anything else. London is still 2 to 5. Indice opens is 9:30 a.m. Kill zone 8:30 to 12. Okay, so all those things stay the same. Just change your chart to UTC -5. All right. Next thing, we have the elections. It's an all-day event on Tuesday. So if we're going to have a look at the weekly outlook, then let's start with Monday. Monday before elections. Definitely a day to be cautious, in my opinion. I'd be taking only A+ setups if something presents, or just sit in your hands altogether. It's not worth giving money back to the market. It can be quite unpredictable around these sorts of events. Tuesday, no trade day. I won't be trading Tuesday because the presidential election is an all-day event. So I won't be participating on Tuesday. Wednesday, again, we'll be cautious, no news, so lower probability. Moving on to Thursday, it's FOMC. Okay, so not till 2 p.m. So the afternoon session, likely another day to sit on our hands. All right, with the news not until 2 p.m. and the press conference at 2:30. For me anyway, I will be sleeping by then. But if anyone trades the PM session, then you might want to wait till after news or after the FOMC statement and conference to look for position. So likely not a trade day. And then Friday, just another day to be cautious, a low to medium probability with no news. All right, let's roll on. Let's move over to the charts. Oh, and just a reminder too, guys, a reminder of the 2 times 50K evals from My Funded Futures that I'm giving away this week. I'm probably going to do that giveaway on Wednesday. So make sure you head over to my Twitter and go and find the tweet, the post that I have in there for the giveaway. Follow the steps to enter. And best of luck. All right, so let's start with NQ on the daily. A couple of things standing out already. First thing is this bearish unicorn. So we have a close below the breaker, and we have an FEG aligned with the breaker as well. We also have a bearish change in the state of delivery. Now we still are within previous day's candle range, so potentially we could see price reach up into this FEG, okay, this FEG here, before moving lower. So whilst I'll have a bearish bias, there is potential for price to move higher first. And then we can target this low resistance liquidity through here. This is a very nice draw through here. So bearish on the daily. We are coming off this swing low, which is why I also think we might push up into this bearish FEG before moving lower. That may happen today or may not. But using the information here, we have got this bearish unicorn and change in the state of delivery that has been respected as well. Drop into the hourly. I don't know if it's noticeable on your end, but my computer is running reasonably slow. I'm on my backup laptop still. Hopefully get my laptop back tomorrow, which would be great. So we have these equal lows. Draw on liquidity. We have a failure swing reversal, and price closed well below the -4. And then if we also look at this manipulation here, you see price came into the -2 to 2.5 with a reversal, but not a decisive reversal, and then we've pushed back up into this bearish FEG. If we mark that out, we'll see we've probably reacted from the mean threshold, consequent encroachment, midpoint, whatever you want to call it, of the FEG, and to the tick almost. So perfectly reacted here. And we also have this low resistance liquidity to act as our draw too. So definitely looking to see price continue lower from an hourly perspective. Let's jump over to ES, move out to the daily. Got the relative equal lows. We have a change in the state of delivery. Displacement. Swept an important level, all-time highs. And then we have displacement through. This is the first moment in time we get a change in trend. We have the bearish FEG here. where price may reach up into before continuing lower if it follows NQ, or maybe it pulls NQ up. Maybe yes, we'll pull NQ up, but looking for price to reach to this external level here. So bearish for ES. Dropping down to the hourly. We can see price got to close below the negative 2.5 here. We're pushing up into this premium FEG, this premium hourly FEG, and we've reacted to that. The price has just put in equal highs here, so that's, you know, potentially we may sweep this and then continue to move lower, and we have this low resistance liquidity through here. For a draw, we did get this close below the negative 2.5, so we can anticipate price to expand to the negative 4. Moving over to oil, let's hop out to the daily. So we had some projections on the chart, obviously from last week. I'm going to leave them there. We'll just move down to the hourly in a second. After sweeping this external, we had this opening gap that price was likely always going to fill. We had a Tuesday low of the week, expansion through Thursday, and then TGIF Friday. So a really good example there of a weekly profile with the Tuesday low of the week. And then we've had price pushing higher today. Now we have already swept Friday's high, so potential here that we may see price move back into the range. If price has a willingness to continue to move higher, we may see a close above this breaker, which would then see a bullish unicorn, and we can target potentially these highs up here. So I'm going to remain bullish, and let's drop down to the hourly. So here's our manipulation, and here's our target region. Price is reaching for that. Now, one thing to note is we have a new day opening gap, and we know price likes to fill gaps. So this is where we could see price come back into the range and fill this gap today before continuing on to its target. You can see price did manage to hold this hourly bullish FEG, but this could be the draw for today's price action. After obviously coming and taking Friday high. But I will remain bullish, looking for price to reach into this negative 2 to 2.5 region, and then depending how price reacts to this level, then I can reassess. All right, let's move back to the daily, have a look at our other assets. Okay, so we had Euro futures. So it completed both objectives on Friday. So we reached into the bearish FEG. So we were looking for a bearish price action back lower. Price reached into the bullish FEG here, and we now have an opening gap. So potential for price, if it doesn't sweep the Friday high, or even if it does, to come back in and fill this gap. Okay, there's quite a large gap to fill here. So we'll remain bearish because we haven't got a close above this FEG just yet. Moving out over to YM now. So there is a very slight bearish FEG here. It's very tiny, but price has reacted there. Right in here. Okay, it is very tiny, but price has reacted. We can also see using these opposing candles, our price has reacted where it bounced off this level and has now used that level as a resistance level, and also off of this order block here. So looking for price to continue lower for YM, targeting this low, these relative equal lows on the daily, for a price push into or a drop into this bullish FEG, and then look for a reaction there. Moving over to the Russell. And price reacted off of this bearish order block. You see that reaction there. So we've filled this void that was here and closed in below the body range, below the 50%. So we're unable to move higher there. So I'll be looking for price to come lower and targeting this region here, aligned with this bullish FEG, which is in a discount of this dealing range. And keeping in mind anything could happen with price with the election this week. So we were looking for gold to come back into this bullish FEG that was left, but we did get a close below that, and then price was unable to close back inside the FEG and has actually fallen lower. We'll just clear that chart. We also have a balanced price range here. We'll be looking for price to continue to move lower. On gold, we'll see how price reacts if it manages to move to this level, how it reacts. We have already swept previous day low and Thursday low. So just something to note there. Potentially we might see price move into this bearish FEG before making its way down. So we were looking for bullish price action on Friday, and we did get that move. We have gap down today. We haven't disrespected this volume imbalance just yet, though. Yes, price is currently located below. However, we haven't got it closed below. We've already swept Friday low. So there's potential for price to move its way back higher here. So I'm going to remain bullish on Dixie. Let's head over to GU. So we were bullish Friday and we did get a bullish close. However, there was a seller's wick that came into play here. We have still held this level. We've got an opening gap though, and we've already swept Friday high. So, you know, potential for price to reach back and fill this gap. We are working from, look, and the other thing here is that there's no wick. There's just no wick to the downside. So there is a strong draw. That's a strong draw on liquidity right there. You know what, I'm going to run with bearish bias just because of that fact. If I can get this to work. With the fact we've swept previous day high, we have no wick to the downside, and we have this opening gap acting as a strong draw on liquidity. One last thing, I was going to just share my settings for the candles. I just had a couple of questions, so a couple of people saying they like the color settings. So if you want to screenshot this, I use the black background in dark mode, and then this is the bullish candle body, and the bearish one's just the white. Okay. All right, guys, let's wrap it up there today. Trade safe. If you do decide to enter the market today, be safe. Thanks for joining me on this wonderful Monday. Let's go ahead and have a great week. And we'll see who the new president of America turns out to be. All right, guys. Take care. Like, sub to the channel. Share the channel around. The channel continues to grow, which is amazing. Let's see if we can get to 700 subs before Christmas. All right, guys. Take care. Bye for now.